When we talk about the future of wealth creation, it's not some distant dream or abstract possibility. It's already in motion. The choices we make today will shape the reality we live in tomorrow. By 2026, just a few years from now, the global economic landscape will look very different from what you see today. Entire industries will rise, others will fade. Those who understand these shifts early on will be the ones who capture the outsized rewards. Think about it this way: every major turning point in history has created a new wave of wealth. The Industrial Revolution made factory owners into tycoons. The internet era created billionaires out of college dorm rooms. The shift to mobile and cloud technology gave rise to trillion-dollar companies. And now we're standing at another inflection point. Artificial intelligence, renewable energy, advanced healthcare, financial technology are no longer emerging trends. They are rapidly becoming the backbone of the global economy. The reason 20 to 26 matters is not because the number itself is magical, but because of the cycle we're in. Economic cycles, technological adoption curves, and generational shifts all align to create windows of extraordinary opportunity. If you study history, you see a rhythm. Innovations start as small, speculative plays. They grow quietly in the background. Seemingly overnight, they explode into the mainstream. Investors who position themselves before that explosion are the ones who reap life-changing gains. Now, here's the part that most people get wrong. They think wealth is created by chasing what's hot today. They follow headlines, trends, and social media noise. But real wealth is created by looking slightly ahead of the crowd, by recognizing where the puck is going, not where it is now. And this requires more than financial analysis. It requires a mindset. You need the ability to detach from short-term noise, to think in terms of cycles, to develop the patience to hold your ground when everyone else is distracted. By 2026, entire markets will be redefined. We will see the dominance of AI not just as a tool, but as infrastructure woven into every industry from logistics to medicine. Renewable energy will no longer be optional. It will be the default as governments, corporations, and consumers all align around sustainability. Healthcare will be transformed by genetic technology and personalized medicine, creating breakthroughs that today still sound like science fiction. Fintech will continue dismantling traditional financial institutions, offering faster, cheaper, more transparent systems for billions of people who have been underserved. The opportunity here is not simply to make money, to understand the deep psychological and philosophical truth about wealth creation. It rewards foresight, discipline, and courage. Flows to those who can anticipate change and are willing to act before the majority sees it. But the barrier is psychological. Fear of loss, fear of looking wrong, and the comfort of staying with the crowd often stop people from making bold, intelligent moves. And so, as we talk about stocks that can make you millions by 2026, remember that the number itself is less important than the mindset behind it. This is about seeing the broader landscape, recognizing the direction of history, and positioning yourself with conviction. It's about training your mind to see opportunity where others only see uncertainty. We are not waiting for 2026 to arrive. We are building it right now. Every decision, every dollar invested, every calculated risk taken today is shaping the wealth map of tomorrow. And when the world looks back, people who had the foresight to act now will be the ones whose lives look entirely different by then. So let me leave you with this. Future is not something that happens to you. It is something you either create or surrender to. By 2026, question won't be whether opportunities existed. They always exist. The real question will be, did you recognize them? Did you have the courage to act? If the future is shaped by massive economic and technological shifts, then the real question is, how do you position yourself to benefit from it? And this is where the art of strategic stock picking comes in. People think investing is about luck or chasing the latest hype. They buy whatever is trending on social media or whatever their friends are talking about, and then they wonder why their wealth doesn't grow. Truth is, wealth isn't built on chance, it's built on strategy. Think of it like a chess game. Anyone can move pieces around the board, but only those who understand positioning, timing, and long-term strategy actually win. Investing works the same way. Random investing is like moving pieces without a plan. You might get lucky once or twice, but eventually the lack of structure catches up to you. Strategic investing, on the other hand, is about playing the long game with clarity and patience. The power of stock picking lies not in predicting the future with absolute certainty. That's impossible, but in increasing the probability that your decisions align with long-term growth trends. You don't need to be right all the time. You just need to be consistently right enough, and you need to hold on long enough for compounding to work its magic. This is the secret that most people overlook. Compounding is slow, almost invisible at first, but then it accelerates and creates exponential growth. Let me put it this way: the average person looks at a stock as a lottery ticket. Want quick results. They want to buy today and sell tomorrow at a profit. The most successful investors view stocks as ownership in real businesses. They look at fundamentals, long-term demand, competitive advantages. They don't care about temporary fluctuations. They care about where that company will stand 5 or 10 years from now. Difference in mindset is everything. Another piece of this is psychology. Biggest enemy of a good investor is not the market, it's themselves. Fear and greed pull people in opposite directions. Makes them sell too early when markets dip. Greed makes them chase overpriced assets when markets surge. Strategy requires discipline, requires you to build a framework for decision making and to trust that framework even when emotions tell you to do the opposite. Here's something deeper: strategic investing forces you to confront time itself. Most people underestimate what can be achieved over a decade and overestimate what can be achieved in a month. If you invest with discipline, time becomes your ally, not your enemy. Every year that passes strengthens your position because compounding builds on itself. If you approach it recklessly, time becomes your enemy because every mistake compounds too. By 2026, those who practice strategic stock picking, those who choose wisely and hold with patience, will be in a very different financial position from those who scatter their money chasing whatever's popular. The reason is simply wealth isn't built in moments of excitement. It's built in moments of discipline. This is why you can't treat investing like gambling. Gambling depends on chance. Investing depends on discipline. Gambling thrives on adrenaline. Investing thrives on patience. Gambling ends when the game ends. Investing rewards you for staying in the game. I say strategic stock picking is powerful. I'm not just talking about money. I'm talking about mindset. Because once you train yourself to think in terms of probability, cycles, and compounding, you start to see opportunity everywhere. You no longer need to be reactive. You become proactive. You stop asking, what's hot right now? And start asking, what will be inevitable 5 years from now? How do I position myself to benefit? And that's what separates ordinary investors from extraordinary ones. Ordinary investors chase what's already visible. Extraordinary investors position themselves for what's just about to become obvious. Remember this: randomness creates noise, but strategy creates wealth. Don't move your pieces blindly across the board. Play the game with foresight, patience, and with discipline. Because if you do, by 2026, you won't just have investments, you'll have a financial foundation strong enough to change your life. Now that we've talked about the importance of thinking strategically, let's bring it down to something more concrete. The truth is, ideas are only powerful when they're applied. When it comes to building wealth through the stock market, the question everyone asks is which companies, which industries, which opportunities have the greatest potential to transform a modest investment today into a fortune by tomorrow? Not literally tomorrow. In the years leading up to 2026, there are 5 areas I want you to think about very carefully, not just as stock picks, as reflections of where the world is headed. Because behind every great investment is a story about human progress, about how society is shifting, about where capital will inevitably flow. The first, and perhaps the most obvious, is artificial intelligence. I is no longer just a buzzword, it's becoming the infrastructure of the modern economy. Just as electricity powered the Industrial Revolution and the internet powered the digital revolution, AI will power the intelligence revolution. It won't just change how we search for information or write documents. It will reshape logistics, medicine, cybersecurity, finance, even creativity itself. Companies building AI platforms and those integrating AI into critical services are not short-term fads, are long-term cornerstones. Owning a piece of this evolution is like owning a piece of history in the making. The second is renewable energy. This isn't about politics, it's about economics. The shift toward clean energy is no longer optional, it's a global necessity. As technology improves and costs drop, solar, wind, and battery storage are set to outcompete fossil fuels on sheer efficiency. Add to that the trillions in government funding and corporate commitments, and you have a tidal wave of investment pouring into this space. Companies driving this transition, whether in energy generation, battery technology, or electric vehicles, are positioned to dominate the next decade. Third, healthcare innovation. We're living through a medical transformation as profound as the discovery of antibiotics. Advances in genetic sequencing, biotechnology, personalized medicine are making it possible to treat diseases that once seemed untouchable. Imagine a world where cancer treatments are tailored to the individual or where genetic disorders can be corrected at the source. By 2026, we will see breakthroughs that change not only life expectancy, but the quality of life itself. Companies pioneering these breakthroughs will capture massive growth. Fourth is fintech, financial technology. Financial system is one of the oldest, slowest, and most bureaucratic infrastructures in the world. But that's changing rapidly. Digital payments, blockchain, and decentralized finance are opening doors for billions of people who were excluded from traditional banking. Whether it's seamless payment platforms, peer-to-peer lending, or decentralized financial networks, the way money moves is being reinvented. Whenever the flow of money is reinvented, massive wealth follows. Finally, we can't ignore cybersecurity. In a world increasingly dependent on digital systems, the threats grow just as fast as the opportunities. Every company, every government, every individual relies on secure networks. Cybersecurity is no longer a side issue, it's the backbone of trust in the digital age. As attacks grow more sophisticated, so too will the demand for companies that can defend against them. By 2026, cybersecurity won't just be an industry, it will be a necessity on the level of utilities like water or electricity. Now, I want you to notice something. These 5 areas, AI, renewable energy, healthcare innovation, fintech, and cybersecurity, aren't random picks. Deeply connected to where humanity is going. They represent intelligence, sustainability, health, financial inclusion, and security. In other words, they represent the very foundations of the next stage of human progress. That's why they're not just good investments, they're inevitable ones. When you invest in these areas, you're not just betting on companies. You're aligning yourself with the direction of history. And when you align with history, You don't have to be perfect. You just have to be present, disciplined, and patient. So as you think about where to put your money, don't just ask yourself, which stock will go up tomorrow? Ask instead, which companies are building the world that everyone else will wake up to in 2026? Because if you can answer that question with clarity and conviction, you will not just grow, it will multiply. One of the biggest misconceptions in investing is that success comes from being bold and going all in on a single idea. That makes for a dramatic story, but in reality, it's not how sustainable wealth is built. The investors who last, the ones who don't just win for a season, but for decades, are the ones who master risk. Understand that managing risk is not about being cautious to the point of inaction, and it's not about avoiding losses entirely. It's about balancing probabilities, protecting yourself against the downside while leaving room for the upside to unfold. About it like sailing. You don't control the wind. Sometimes it's calm, sometimes it's violent. What you control are the sails, course you set, and how you respond to sudden changes. Investing is the same. You don't control the market, but you control your exposure, entry points, and the way you position your portfolio. Risk management is not about predicting the storm. It's about surviving it and using it to your advantage. One of the most practical ways to do this is through diversification. People often misunderstand diversification, think it means spreading money across as many stocks as possible. But that's not real diversification. That's just dilution. Real diversification means carefully selecting investments that don't all move in the same direction at the same time. It's about holding assets that balance each other, so when one side struggles, the other side cushions the impact. Balance gives you resilience. The second piece is entry strategy. Most people rush in when prices are soaring because they don't want to miss out, and they pull back when prices drop because they're afraid. That's the exact opposite of what works. Investors know that entry timing isn't about guessing the bottom or the top. It's about building positions gradually, buying with discipline, and letting time smooth out volatility. This way, you don't put yourself at the mercy of short-term swings. Another layer to this is psychological risk. Risk isn't just numbers on a chart. It's your relationship to uncertainty. If you panic every time the market drops, your strategy doesn't matter because your emotions will override it. Managing risk means building not just a portfolio, but also a mindset strong enough to withstand turbulence. That's why great investors spend as much time studying human behavior, including their own, as they do studying financial statements. Understand that the market is ultimately a reflection of human psychology amplified on a massive scale. By 2026, markets will go through cycles, just as they always do. There will be moments of euphoria where everyone believes prices will rise forever, and moments of despair where it feels like the world is collapsing. If you allow those emotions to dictate your moves, you'll be buying high and selling low, the exact formula for losing money. But if you commit to a strategy that balances risk, allows for volatility without breaking your confidence, then those same cycles become your advantage. Here's the deeper truth. Wealth is not built by avoiding mistakes entirely. It's built by surviving them. Every investor, no matter how skilled, will face losses. The difference is whether those losses wipe them out or simply serve as temporary setbacks. Risk management ensures that mistakes don't take you out of the game. And staying in the game is what allows compounding discipline, foresight to eventually deliver extraordinary results. So don't think of risk management as a burden. Think of it as the foundation that allows everything else to stand. Without it, even the best stock picks collapse under pressure. With it, average opportunities can grow into something extraordinary. In the end, risk is not something to fear. It's something to respect. If you respect it, if you design your strategy to withstand it, you don't just protect your wealth, you position yourself to grow it through the storms. Because the truth is simple. Opportunity rewards those who can stay in the game long enough to see it mature. Only way to stay in the game is to master risk before it masters you. When it comes to investing, one of the greatest traps people fall into is confusing short-term excitement with long-term success. Temptation to chase quick profits is powerful. It feels good to see something spike and imagine that you've captured lightning in a bottle. But more often than not, those short-term wins evaporate just as quickly as they appear. What's left is disappointment, frustration, and often less money than you started with. The people who build lasting wealth are the ones who learn to resist that temptation and instead cultivate a long-term mindset. This is where psychology comes into play. The market is designed to test your patience, to constantly lure you into reacting to every fluctuation. Prices go up and you feel like you're missing out. Prices go down and you feel like you need to escape before it gets worse. Both reactions come from the same place, the inability to see beyond the immediate moment. Investing isn't about the immediate moment, it's about where your capital will be years from now. The short term is noise, the long term is the signal. Think about the way a tree grows. On the surface, day by day, you hardly notice the change. But over time, steady roots and consistent nourishment, that tree becomes massive, unshakable, and capable of withstanding storms. Investments work the same way. If you plant wisely and allow time to do its work, growth becomes inevitable. If you keep pulling the seed out of the ground every few weeks to check if it's growing, you'll never see it flourish. Is where compounding reveals its true power. Compounding doesn't reward impatience. It punishes it. Real gains don't show up in the first year or even the second. They show up after years of steady growth when the effects begin to multiply. Most people never reach that stage because they cut themselves off too early. Trade away the extraordinary for the illusion of quick gratification. Now, I'm not saying short-term trades never make money. Some people get lucky. Some people even get skilled at navigating volatility. But here's the truth. Luck runs out. Even skill in the short-term game eventually meets an unexpected storm. The long-term approach, on the other hand, is not built on luck. It's built on discipline, resilience, and foresight. It gives you the ability to step away from the chaos and trust in the direction of your decisions. This difference between the short term and the long term is also philosophical. It's about how you choose to see life itself. Are you willing to sacrifice stability for immediate satisfaction? Or are you willing to delay gratification in order to create something enduring? Answer to that question determines not just your financial results, but your entire relationship with wealth, time, and opportunity. By 2026, there will be stories of investors who chased trends, made a quick fortune, and then lost it just as fast. There will be other stories, less flashy, less dramatic, of investors who quietly stayed disciplined, who held through the noise, and who emerged with portfolios that changed their lives. Which story you become is entirely up to the mindset you adopt today. The market will always tempt you with shortcuts. It will whisper promises of quick wins, of easy gains, of beating the system. But there are no shortcuts that last. The only path that consistently delivers is the one built on patience, conviction, and a willingness to think in decades, not days. So the question is not whether you can make money in the short term. You probably can. Question is whether you can hold yourself back from chasing it and instead commit to the discipline that allows wealth to compound. Because in the end, real wealth doesn't just belong to the fast. It belongs to the patient. We've talked about the future of wealth, power of strategy, the industries that will define the next decade, the importance of risk management, and the mindset of long-term investing. None of it matters, none of it, if you don't act. The greatest threat to your financial future isn't bad luck or even a bad market. It's hesitation. It's the fear of taking the first step. It's the endless cycle of waiting for the perfect moment that never comes. Think about it. Opportunities are everywhere, but they only exist for those who are willing to move toward them. History is filled with people who saw the change coming, but did nothing about it. They recognized the rise of the internet, but never invested. Saw the early signs of smartphones, but dismissed them. They read about renewable energy, but told themselves it was too early. Recognition without action is meaningless. The winners are not the ones who see the future. It's those who bet on it. Procrastination disguises itself as caution, but in reality, it's a form of self-sabotage. Every year you wait, you're not just delaying potential gains, you're losing time, the single most powerful multiplier in investing. Time is what allows compounding to turn small beginnings into extraordinary outcomes. Every dollar not invested, every month spent waiting, is time you can never recover. The markets don't wait. Innovation doesn't wait. The future doesn't wait. And here's the paradox. People wait because they're afraid of risk, but by waiting, they actually take on the biggest risk of all, being left behind. By 2026, when the industries we've discussed are mainstream and these opportunities are obvious to everyone, the prices will already reflect it. By then, the people who acted early will be sitting on gains, while the ones who hesitated will still be talking about what could have been. Taking action doesn't mean throwing caution to the wind. It means starting with intention. It means building a strategy, real capital to work, and committing to the discipline of staying invested. It means understanding that you will never have perfect clarity, because investing is not about certainty, it's about probabilities. Those who demand certainty before they act will never act. And those who act with discipline, even in uncertainty, are the ones who win. This is not just about money. It's about psychology, training yourself to live in alignment with the future rather than being stuck in the present. It's about courage, the courage to decide, to commit. When you learn to take decisive action in investing, you begin to build the same habit in every other area of life. You stop waiting and you start creating. So ask yourself right now, what's really stopping you? Is it fear of being wrong? The comfort of staying with the crowd? Is it the illusion that tomorrow will be a better time to start than today? Those are the barriers that separate potential from reality. And those are the barriers you need to break if you want to be among the people who don't just dream of wealth, but actually achieve it. Truth is simple. The future is being built whether you participate or not. By 2026, the question won't be whether fortunes were made, will have been. The only question is whether you had the courage to claim your share. So let me leave you with this. Every day you wait is a day you've chosen not to move closer to financial freedom. And every day you act is a day that compounds into your future. Don't wait for certainty. Don't wait for permission. Don't wait for the perfect moment. It doesn't exist. The time is now. Because wealth doesn't come to those who hesitate. It comes to those who step forward with conviction.